What's up, YouTube? It's your boy Michael. Welcome to MC Niger FX. So today I'm going to show you the breakdown of entries are supposed to enter, exits are supposed to have run away from, and the ICT 2022 mentorship, like how you could have used it for the week. But upper week, based on my back testing, I was going to the market to be a buyer for the week, and I'll show you my reason why. But as you all saw it, the dollar was not smiling with anybody, and it was just piercing everybody to the downside. Now let me show you what I saw last week, and I will now show you why I didn't really trade this week that just finished now, that I'm using to show you all the trades for the week. But I'll show you how you could have participated in each of the day. I'll show you. This video is going to be very detailed each of the day, and I'm going to be explaining the ICT 2022 mentorship, everything you need to know so far, how I've seen what works and what doesn't work and stuff like that. Now let's go with me. Now you can see that last week this is the daily time frame on GU. Last week we were around there. This is Monday, Tuesday, Wednesday, Thursday, Friday. We were around this corner, this tiny daily candle. We're around there. You feel me? We're around there last week. And when we were here, this is Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, we're here. You can see when we're here, this was my thought. Let me draw a line on it. This was my thought. That was the last candle. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, Friday. Let me draw what I was looking at. Now, if you understand trading, you will know that price move from internal liquidity to external liquidity, and from external liquidity to internal liquidity. So this was what I was looking at. This is the daily time frame. Remember, this is the daily time frame. So last week I was like, okay, price actually broke all this. Like, look at this range that's happening right now. Look at this range that's happening here. See all this range? Price actually broke above everything, took in all the liquidity and blah 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 on top of it, took everything. So it was showing a bullish, and it has been running up. It has been running up quite well. Then ranged there, then broke up. So then price now came and retraced into the 60% region fib level on the daily leg of this run up. I was now like, okay, probably as we are taking external liquidity, we are balancing internal liquidity, that's fair value border block, whatever is inside. That means we are going to look for a buy. That was my anticipation going for the week. I was just wanting to find a buy, and I was burnt 3 times before I like, okay, what is really going on? And last week that just passed, there were a lot of news, and I'm like, so the news favored dollar a lot, and fundamentals worked more than technicals. That's how I put it. The technicals was clear, but the fundamental was just too strong that the technical could not be able to withstand it. Now let me show you how you could have participated for every day with the ICT 2022 entry mentorship method. So let's go to, I used 15 minutes to watch the market. I used 1 hour to pick my fibs, and I used 3 minutes and 1 minute to enter because somebody was telling me trash on my last video. I'm showing you the entry and exits. I'm not trading. You understand? So we are trading based on hindsight now. So I'll be mostly on the 3 minute and 1 minute. Let me be on the 1 minute. Be on the 1 minute. So so this is Friday, Thursday, what do you call it? Wednesday, Tuesday, and Monday. This was Monday. Good. Now this is Monday. We are on GDP USD. Now I want to be showing you the entries. Now the strategy is intersection liquidity theorem, and you can see this indicator I have here. This blue line is marking the beginning of my Asian session to the ending of my Asian session, which is where this blue line ends. Now New York session, London, this my time frame on my chart is on London session. It starts from 7, so this is 7, right? But based on my trades, I've seen that 7 o'clock is not the right time to start trading the London session. There's always been manipulation. Sometimes the trade will go, but most time there'll be manipulation. Now you can see I've marked 7 a.m, 6:59, 7 a.m, whatever, it's 7 a.m, 7 a.m. Now let's watch what the market did 7 a.m. So 7 a.m, market came up, broke out from the Asian high. Before that, this is what I usually do. I used to mark the New York midnight open. Why do I mark the New York midnight open? I mark the New York midnight open, and in the New York open is 4 a.m. in Asian session 4. So that's the red line, the midnight New York open. So that's it. Now I wake up in the morning to trade, and I see that the price is ranging above the New York midnight open. Based on this concept, if you are trading the London session, you must always mark your New York midnight open. I did not say the general midnight open. New York midnight open is 4 London session. Now you can see that when price opened, when I woke up around 7, I saw that price was ranging above. But I told you one secret now that 7 a.m. is always manipulation. That 1 hour open London session, I hate trading because a lot of manipulation. Now I'll show you why. Let's see whether I will see any manipulation. I always start trading from 8. You understand? Now you can see 7 a.m. open, sweep the high, consolidate, sweep it, retrace, is going up. Then we have all of a sudden we saw this meltdown bar. Let's open that very well. Now if you are trading the ICT 2022 mentorship, if you are above the New York midnight open, I'm preparing to sell. Understand? That's one of the criteria. I'm preparing to sell. So we are above, I'm preparing to sell. Then I'm just waiting for a sell, a shift in market structure to show me to sell, right? Then when we get there, this was the last lower low. Then price printed this. Then price went here. Then printed this one. Then came down again. Then this was the last low, right? This low here, there was last low. This 2 blue candle. Then you can see this candle like as if we engulfed it, then rejected back. Then we had this 1, 2. If you are not an experienced trader, you would like to say, okay, let me sell from here when we have this pullback. You feel me? But the breakdown, let me see. All these things crazy. If you are looking at this market when it was building up, you will see that you'll be seeing fair value gaps. But now, because I actually traded this market, now I'm actually looking at it, there's no fair value gap because market have solidified. So that's what I'm trying to tell you guys. Backtesting is good, but backtesting you only use backtesting to like say, okay, does this concept that I trade work? Like what they say, your step 1, step 2, step 3, does it work? If it works, then go to live. It's when you go to live, then you start seeing crazy things that the market always do. I won't lie to you guys. When I saw this 2 breaking, because I was looking at this, that okay, that this was the last lower low. Then I saw this next 2 black candle, 2 bullish candle. There was fair value gap. Right now it seems there was no fair value gap. There's fair value gap. Then even though you can see that this tiny fair value gap, look at this space here. Before this large blue candle came up, Look at this space here. So that was the strategy. The strategy is liquidity sweep, which has happened. Liquidity sweep, market structure shift if you are selling to the downside, then enter from the fair value gap. Now let me pick my 2 shorts. You see, if you have entered from this fair value gap, put your stop loss here, 3 pips, right? Put your stop loss there, 3 pips. You can see that market ranged up, did as if when it got to the top there, some people call this area order block. They are playing with themselves. They don't know anything about order block. I still have explained order block. Order block is 3 consecutive candle, then 1 large candle, and it must have fair value gap. But some traders that don't know anything, they will say this and order block and say, it's reacting from here. It actually went down, but before you know it, you can see price ripped the head away. When did this happen? Around 7. Now I told you guys that I don't trade again from around 7. I wait till 8 o'clock. Now this is 8 o'clock. Price is time. Market moving price and time, or time and price. Time come with time and price. Now you can see 8 o'clock came, took the so-called high. So this is the liquidity, took the so-called high, raised up. This was the last low. You can see when it came, it rejected. It didn't break it impulsively. It went up again. We're just waiting for market structure shift. Now look here, guys. Look at what happened here, guys. When price got here, made this was the previous lower low, made this low, then it broke down impulsively, causing market structure shift. 1 minute is crazy. You have to see inside. See the market structure shift it caused now. That's the market structure shift. Look at it. Market structure shift with fair value gaps. So all you have to do now is to pick your entry, waiting for the pullback into the fib. Understand? Let's just put it at this entry here. Understand? See the market structure shifts. Market structure shift happened here. This was the last lower low before these 2 impulsive bearish candles. Liquidities have been taken. Understand? Break. We test inside the fair value gap. This was already 8 o'clock, around 8 o'clock. Now, because you are catching sniper entry or anything, you have to give yourself. What I usually do is I used to put it at the high, and I used to round up. When I put it at this high here, it was showing me 3 point something. The truth is, if you actually left it at this high, let's say round it up to 3, is it that price went like 1 to 1 ish, then it came back and stopped you out? Probably there was news release, but all those yellow news and stuff like that. It came back and come and stop you out. You can see the strategy is simple, but the problem is there's a lot of manipulation. Even at where you say your key area is. So the only truth you have to be giving yourself is, if you enter after you have covered the head, if you are still around 3 pips to 4 pips, still give it a space, breathing space, or 1 pips more. If you have put this thing at just 4 pips, you will have been safe. Understand? You can see price retrace very close, but let me put it 4 pips ish. See, just like 2 pipettes away to be stopped out, but you will have still be saved. That's the only problem trading this strategy. You will be stopped out a lot. Then you have to like, okay, if I'm entering, if I see the strategy and I'm entering, I'm gonna give it breathing space. You feel me? give it breathing space because pullbacks are there. Now, if probably you were stopped out here and you are still holding your buy, that means you have been stopped out twice. Although ICT said if you stop out twice, wait for the next day. You feel me? But if you have coconut head like me and we're still holding your buyers, like this thing is supposed to sell. See, when it came to take this day is just an unfortunate day. Normally it should just sell, but probably there was a yellow news release or something like that just pushed the market up for a while, took the high. Now you can see, look at it, it's still the same thing it did. Main thing is taking liquidity, which it did. This was the last low. You see the way it broke it impossibly. Can you see, guys? It broke it what? Impossibly. It broke the last lower low impossibly. That's the main thing. Understand? After breaking it, what's next? How do you enter? There are two ways of entry. Is that you pick your fib from the high to the low before it starts retracing. And put your entry limit at the 50%. 50% always work. If it's pullback and it's a small pullback, if the displacement that cause market structure shift is large, understand, like 3 candles, sometimes it can just be 1 candle, but it's very large, always wait for retracement into 50%. But if it's not large, you see 50% came inside, understand? What am I doing? 50%. I took a buy here, Kenny. If the displacement is large, that's another secret. Use fib to get a premium entry. If the displacement is not large, immediately it have had the market structure shift and you're already seeing a blue candle build up. This is 1 minute, remember, it's very fast. You're already seeing a 1 minute build up candle, like you want to sell. I started said trust the model. You already seen a, like that, what happened here, market structure shift. You already seen a blue candle build up, you enter, press sell, and it will sell on a normal day. But on this day you can see pull back. If the displacement is large, you see this candle back goes. Sometimes even as it's large like this, it may just, this where it's pulling back like this place where it's pulling back like this, that's where you enter. You still have a reasonable stop. See, it's still roughly random, everything 4 pips. Me watching this market is live here, I entered. You feel me? Live here, I entered since pullback. But for some days when the pullback, when the displacement, especially when it's caused by news, especially during New York session, always enter at the 50% displacement level. You feel me? And you see, it went, tap it, put your stop loss. You see, it's telling you to round it up to 3. You feel me? Round up to 3 pips. And where will be our target? Our target will actually be, depending on who you are, you can see that target this next liquidity. This is what giving us 1 to 6 at the Asian low. It gave 1 to 6 hour, but you can get 1 to 3 hour in the middle of the range. So depending on who you are and what you are, if you can hold, fine. If you can't hold, target the nearest liquidity, which is half of the Asian session, because sometimes it may just bounce in the air and start tracing. You can see it was very close to taking, imagine you are the one that were here now, very close to taking your TP, and then price all reversed straight back to your entry. Can you imagine? So, but you have to understand the reason why it happened like that. The reason why it happened like that is, if I was looking at the trade, I always like to come out from 10:30 London session. I can see that 10:30 was around there, and that was giving us around 1 to 5 hours. So the kill zone for London session is 8 to 10:30, while for New York session is 8:30 to 11. Understand? Now you can see New York session starts 11 in London session is New York session. You can see that when 8:30 have reached, price has cooled down and started retracing back to the upside. Depending on your daily, like your directional bias, but me, directional bias doesn't really matter to me. All I know is I have some criteria that I look for. I look for areas of liquidity, and okay, if price is here at this time, what is it doing? Is it accumulating liquidity or taking liquidity? Okay, where is it going to find? Look where I will find the next liquidity. Is it put back during the break in London session? And when, let me find New York session. New York session is 12:30, 8 o'clock. You can see the 8:30 candle when it open. Understand? If you are still bearish buyers, if you are still bearish buyers, after the 8:30 candle open here, this was the last lower low, and this was like a consolidation that market now broke impulsively. See this pullback? That's where you have entered and will have sold to the downside. That was on Monday. I think Monday was still piece of joy. Now when the chaos started happening, it was on Tuesday. People that did not experience the market on Tuesday would think that the day was so, it was both bearish and bullish. You can see this is the way market went down and went up. And if you look at the daily candle, you see there was a rejection. It went so deep and there was a rejection. So first of all, what do? Mark our stuff 4 a.m. Now I wake up around 8. That's our midnight New York open. I wake around 8, and what do I see? That we are ranging below. So what do I say? If it's ranging below, we are expecting to buy. If it's ranging above, we are expecting to sell. You see, as it was ranging above, we sold and it worked. Look, it was ranging below, but this was the days when news started pouring out like crazy. From Tuesday to Friday, different crazy news started coming out. You can see we are expecting to what? Buy. But from 8 a.m. what happened? Markets have just been ripping down. We are waiting for buy setup. Nothing. Till this is 10 o'clock now. 10 o'clock now. I know that 10:30 markets like to start having like reversal, preparing for New York session, and I want to buy. I'll start looking for, okay, with the reversal show me entry to buy. Now if you look at this chart very well, this was the last lower low. You feel me? We are rating that, okay, now in preparation for the New York session, I usually let the liquidity to be swept of the London session, but you can see for today 7 a.m. happened around there. This is 7 a.m. 7 a.m. happened here. 7 a.m. happened there, and I was anticipating. I've already marked because I was waiting that, okay, I want to still see a buy setup. 10 o'clock, there was this spike was in news. Nothing happened there. It broke it. Nothing happened. Then all of a sudden, we had this guy here. 1, 2, 3. Then this push back down. Nothing serious. Now around before 10:30, you see this run up. This run up. He had market structure shifts, but let's see if he retraces to 50%. this is not like a kind of my clear setup. I didn't enter it, but I'm just showing you, like, if you're like, market structure shift have happened, let's see for a pullback. And I actually was waiting for, I was not expecting the run up like that, because I was waiting for, like, okay, price will probably still come down and take the London low as liquidity. You can see that it did not pull up to 50% at all. I did it almost, but it didn't. So we sit on our hand. Guys, you don't know the power of sitting on your hand if you already know what you are doing. I'm telling you. So you see 11, usually you're supposed to sweep London low, nothing happened, and price just rallied up. Today you watch everything rally up. I was just looking, because my concept says what liquidity must be stretched first. It's supposed to come and sweep the London low. It didn't, and I was looking, and the market was rallying up, and I was looking. It did not come for the low, so it was just using the news energy to roll up. So that was that for that day. That day, no trade. So I say, I've watched the market from 7 a.m. to 4 a.m. No trade. I'm just looking. Our market is actually moving. No trade. You don't know how painful it is, but you are building your discipline. Now, this day again, first of all, as usual, this is on Wednesday. What do we do? Wednesday was so beautiful. You had 2 stop outs and 1 win on Monday. On Tuesday, no trade. On Wednesday, come and see what's happened now. What do I do anytime I wake up? Mark midnight open. I use it to trade only for the New York session. Midnight open was there. You feel me? Now 8 o'clock. 8 o'clock is here, right? 8 o'clock, we are already below. I was anticipating towards buy. If you were still stubborn saying 7 a.m. is my day, 7 a.m. The setup actually played out 7 a.m. And I'll show you. See it. I played out. If I wake up 7 a.m., I'll see that we are above. See now, we're actually above the midnight. We're above. This was the last low. You can see there's a market structure shift there. See the way price broke this place? The market structure shift. This is where you'll have entered, put your stop loss at this side there, and you'll have rolled it down. But today it worked, but tomorrow it might not work. So you have to be looking for something that is consistent. If it doesn't meet my criteria, no. So I wake up by 8 o'clock. As I said, I trade from 8 London. I say we're already below. I'm like, okay, I want to buy. And remembering from my back testing that I want to buy. I want to buy. Now I didn't see anything. Now we are almost close to I didn't see anything. Now 10 o'clock I've knocked. This is the London low. Let me use something else to mark it. This is the London low. You see the London low here? This is the deepest London fell in. Remember, we want to what? Buy. This is the trade. I actually cut it. Want to buy. This is our buying setup, right? Now, what does our strategy say? New York came 7 a.m. So still consolidating. That was usually happen. New York will push it, consolidate down to go and sweep the low exactly around 8. Then 8:30. I'll wait for that candle. Now, see what happened now. Especially when I've seen that, okay, today was what we call a perfect ICT day. Oh, labash. This is the term. So this is London low. London low liquidity was taken. Step 1 liquidity take was taken. Then this was the last lower low. You feel me? That was the last lower low that market the last lower high low, then you can see that immediately price took the liquidity, consolidate small, and there was a bearish, there's a bullish run. So liquidity sweep, market structure shift. You can see this large candle now, bars that broke this candle, market structure shift have happened. Then what do I usually do? The displacement was large, so I pick my fib. Oh, let me keep this guy on one side first. I pick my fib from the low to the high that I started pulling back. Now we'll pick our entry. You can see 50%. Bam. Stop loss at the low. Round it up to what? 5. Round it up to 5. Now delete this. Now you can see, oh, Labash. And on Wednesday, what will we be targeting? I was actually targeting this high here, this high here, this guy here, this guy. That was what I was targeting. So 5 pips stop loss, liquidity sweep, market structure shift, 5 pips stop loss, and anybody that skip here, it's crazy. See 1 to 7 hour. It was not 1 to 7 hour. Because see the head. Target that liquidity. Because I wanted to buy. I was like very bullish. 1 to 8 hour. Yes. Can see. Then around 6, there was a news that came up. Interest rates. You understand? You see that it was the news that hit my TP, helping to hit my TP. Highest thing I did before the news came out, when price was around there, I put my stop loss around there. Put my stop loss 1.2700. You feel me? Put it there. You feel me? In case the news is against me and just tank. So you can see smashed. It went to 1 to 32 hour. I can remember. Okay, 1 to 20. Let's just put it at 1 to 20 hour. It's crazy. We've left it like overnight, like, because that's what I was actually planning to do. I wanted to like, yeah, okay, this is where the bullish starts, only to come the next day and to see what the news gave us, a bearish day again. So you see, you've seen the strategy now. And see the next day market just tank again. I was like, I'm now becoming suspicious that something is affecting that. The dollar is not playing with anybody. Understand? So, but that's when we need to be flexible. But I wasn't, and I was just looking throughout the day. And now you can see for this day, first of all, we mark what? Midnight, which is 4, which is around there. First thing to do when you wake up in the morning. You see? This is 4. You can see what happened here now. The strategy work around 7. But guys, I'm telling you, this maybe it's just working because of this. That last week was a news week. It was a normal day, brothers and sisters. 7 o'clock is madman play. What will happen is, as it has shown Kini like this, it will sell off to this middle range. Then around 8 o'clock, we will come and take this head again. Watch my previous video. I think I showed you. It will come and take the head again around 8:30 before it moved the direction. But you can see for this day, it just showed it. See, liquidity sweep. We had liquidity sweep of the Asian high. We are above to sell, indicating to sell. We are above midnight open, indicating to sell. Understand? We are above, sweep the liquidity, market structure shape, back. This was a very beautiful, clean one. It paid me, as I later said, that I didn't enter, but we have to follow our rules. So, and you can see liquidity sweep first thing. Last low was this guys here. Market structure shift happen here. The pullback. This one I don't need fib because it's very the market structure is very close. Pullback, enter. Let me use short position. Pullback here, enter. Maybe you are seeing the blue candle build up. That's when you enter. Remember, give it breathing space. Around 7 like this, safe, you can put it at 5 pips. But the distance between the 5 pips, I'm telling you, if it's still around before, if he wants to manipulate it, to still grab all those places. So I'm just showing you, I'm showing you both ways. But you can see that back start just melt. God Almighty, this day was crazy. I was just like, God. You can see 1 to 28 hour. They were trade just there, but I was just bullish buyers this week. They were trade. I was bullish buyers, and it was not lining up in my trading time because around 8 o'clock when I wake up, we're already below. You feel me? We're already below the midnight, so I'll be anticipating to buy. It's like an indicator for me. Understand? Or maybe, not maybe, please. That's that early time. That's 7 o'clock. It's very tricky. But I will try and see what will be the difference when we are trading in a newsless week environment. When I say newsless week environment, last week was a newsless week environment, so it likes to delay before it shows it, and that manipulates a lot of people. But if it's a news week, I think setup comes up earlier so that people may think it's not the setup. No, it's playing my game with me, but I'm documenting everything. That's why I'm even doing this video. And on Friday was just trash. It just opened and it was just going down throughout London session. Kenny, it was just going down. You can see this day too. So that day I did nothing, but you can see I watched 1 to 28 hour trade on Thursday. Then this day came up again. You can see this day was Friday, which was the last day. Friday, I woke up around 8. I was looking for a buy. See, price was just melting down. There was later a buy setup around there, but it did not pass my test. My test is liquidity sweep first. It did not sweep the London low, so I could not take it. You feel me? Although for this day, I did not take it. Did not take London low. So you have to be grounded with rules. So capital is too safe, and you see those ones that we wait for the rules, everything. See that one, it went far. Feel me? So that's just it. So I guess that was a week. So the main thing about this London session, best time is 8 a.m. to 10:30. 10:30, come out from your trade, except you want to watch the pullback, because pullback might actually happen to probably your entry. And if you're a panic trader, you may not understand what is going on, and it may not sell back. If it's selling for that day, the daily bias is to sell. It's going to be bearish for that day to now sell. Or if you want to come out from your nearest liquidity target, always use that for your London session. Then New York, look for re-entry, because sometimes during New York re-entry, price might actually, the way it might pull back, it might actually pull back and go and take your London high. If it pull back to a way that is very close to the London entry, sometimes it may take the high, because that is the fuel for New York session, especially for EU. That was usually happen for EU. For GU, I've not really seen it, but that's my criteria setup. It must take, anytime I'm trading New York, it must take Kenny, except I already have an entry from Kenny, but I always like to come out 10:30 London session. So New York session, same thing. The same way you use liquidity of Asian session for London session, you use liquidity of London session high and low for New York session. So that's that on that. Thank you for watching. Really appreciate. Be able to like, subscribe. If you want to get in touch with me, all my description link are in the video below.